Hi guys, welcome. Okay, today we are going to see the topic from the financial management in relation to the scope and the objective of financial management. Anyway, while comparing to all other topics, there are few topics which entirely theory. If you want me to put together everything, nothing is practical because we are not going to do anything practical right now. We are using the pen and paper to do the sum. So I can say it as a text and sum. These are the two things right now. In it, we are going to discuss about discussion on the topic called text-based things, which we usually use the theory. But if you ask me, everything in we are learning from the book is not practical and theory. Entirely, it's theory only because we are not putting into action anything. Okay. Anyway, as usual, we are discussing about the scope and objective of the financial management. So we are going to discuss about few things in this video, not entire topics, only couple of things. One with the basics and another about the sources of the finance. Once we done, I will be coming back to this because it's the entire things in the entire list of topics in the scope and objectives of the financial management. Okay, we are going to start from this topic. Before that, I want to explain something. My friend done something. He planned to buy a bike. Great. So what's the cost? So it's 50 lakhs. Simple. He spent the 50. He purchased. So you are asking how he got 50. Simple. He had a saving of 55 lakhs and he 25 lakhs he borrowed more. Great. Right now he purchased the bike. Okay, the bike is ready. It's yet to go. Simple. The bike is in Chennai and you need to go to the hometown. You need to travel. Ma. There is option one, you can transport the bike from Chennai to his hometown. It's a bike, no, we are having a craze like we need to take a long drive. Take it as a 300 kilometers travel. Okay, right now, his bank balance is zero. Why? He planned accordingly, only he spent 50 lakhs to buy the bike. So he spent everything. He don't have any penny or paisa, not even a dime in his hand right now. Great. So he need to use the bike to travel from the location from Chennai to his hometown. Okay, there is almost like 100 kilometers, 100, 300 kilometers. Okay, fun fact about this scenario is he is great, bike is great, unbelievable, and everything is great. Okay, great. He traveled and after 100 kilometers, the bike stopped. What happened? Simple. I ran out of fuel, the petrol. Okay, right now, as I said, he don't have money. He planned everything. Yeah, 50 lakh is far enough. I don't need anything after that. Fun fact, the bike had the petrol for only to run until the 100 kilometers. Okay, our balance 200 kilometers. He need to travel. Right now, as I said, he don't have money. He didn't account for the bike's fuel, the petrol. To run the bike, he needed petrol. He forgot to purchase. He forgot, he didn't forgot to purchase. He forgot to take the money for it. As I said, he don't have a dime in his hand. Entire saving is gone. He borrowed 25 lakhs. That's it. The financial decisions are, if you made like this, what will happen? You will be standing in the middle of the road, 200 kilometers away from your hometown. No one will lend you some money. Thinking this, you are having super bike and you are in the middle of the road and you are saying, I don't have money. Ah, acha. Oh, you don't have money. Oh, you have super bike. Okay, great. Great. Okay, that's it. So that's how the financial decision he made. So you have to take in account of both things. One, the bike and the fuel. So pre-planning is great, but you have to put into account of all the things, all possible outcomes, and what are the things you need to spend. Okay. Anyway, he planned to transport the bike means he would have. I'm sure for transportation he need money. So if he don't have money, that's it. Okay, you understand the basic idea of the bike and the fuel example right now. Same way, company or any organization take anything. First thing, what they will know, which asset, fixed asset or current assets. Which first total asset, take it as in a fixed assets. Next, cash for what? To run the day-to-day activities. In this scenario, take it as some bike. In this scenario, take it as fuel. A great. What he done, he forgot about the fuel. He purchased the fixed asset of bike in this case. Okay, what are the source? Simple, my own money or borrowings. Same take a company like it's planning to purchase a machinery which converts the raw material into the finished goods, the property, plant and equipment, the non-current assets, which is nothing but a revenue generating asset. What is the raw material? Cotton. What is the finished goods? Cloth. In a scenario, what are the things he needed? Total investment, property, plant and equipment. What is the cash required for to purchase the raw material? And cash for what? To pay the labor. So what are the requirements you need? One to meet, purchase the property, plant and equipment. Next, raw material. Plus you need to pay for the labor. You have to plan for entire thing. No, I will only plan for this. I will do something simple. Think in this way. My plant and machinery in my factory. Okay, I don't have raw material waste. So I have raw material. I don't labor. What to do? Nothing. Think in this way. Pencil. I'm making pencil. What need lead? Wood. Next to glue. We have machinery. Okay, simple. To put together, we need someone called labor. Without these things, we can't do anything. So we need labor. Yeah, I have the lead, I have the wood, I have the glue. But someone need to put the wood in the property, I mean the machinery, and someone need to put the lead into the wood, and someone need to use the glue to fix together. To put together, I need someone is known as labor. Okay, understand? That's it. You have to take any business, you have to understand one thing. What is the business? What business? More important, business model. What kind of business model? If you take Netflix, the subscription based payment, you need to pay 119 rupees per month. What you get? Movies, web series, mobile games. Yeah, there are games also there. Mobile games are there. There are, it will be around 2 GB, 8 GB, something like, I don't know, like there are a lot of movies there provided by Netflix. And there is one more thing they are doing. What? Production. Simple. If you have a story, you want to produce, story is there. You want to produce the movie. What about the money? Netflix will give. Just like that, I want you, but you have to pitch it. You don't know how to negotiate what are the things. But when you finished everything, you need to sell it to the Netflix. Now that's it. They will release in their platform directly. They will release in the platform. What they are doing? They are producers. They pay money for you to take movie. Obviously, it will have a lot of criteria. There are things. And one of the most important things about the Netflix is the first one to take the risk. They had an R&D. They are selling DVDs. Then realized, why don't we get into the internet? At the time of internet, they planned accordingly. They got the opportunity to make the DVD business into the online. Like right now, we are watching movies and everything from online. No, like that. Yeah, okay. So you have to understand the business model. Netflix, it's a subscription based. What are the things you will get? Movies, web series, mobile games. I don't know if there anything, but if you take Amazon, it have a lot of things. That's the reason I took Netflix, because if you look into the Amazon Prime Videos, you will need to pay the subscription, but you will get a lot of things in addition to the Amazon Prime Videos. You will get the Amazon Music, you will get the Amazon like the shopping, like you will get the on-day delivery, Prime Day delivery, and you don't have something called transportation cost sometimes. Without Prime, if you look some product, it will take 1 week to come. If you have Prime, it will come tomorrow or day after tomorrow. If you are in a metropolitan city, there is possibility you will get the same product on the same day itself. A lot of benefits. And if you look into the Amazon Prime Videos, there are a lot of options. You can watch movies. You can buy the movies from different Paramount, if I'm not wrong. There are a lot of things, and there is something anime. Anime also there, but you need to pay extra for that. A Crunchyroll also there, but for that you need to pay, and you can watch it from Amazon. Yeah, there is Crunchyroll, which is also separately available. You can buy it. But if you look into the Amazon Prime Videos, and Anime Times also there. A lot of movies you can purchase, but not from Amazon, from someone else. It also their own have own movies, web series, and even they have the games. PC games also available in the Amazon Prime, but It's a lot. It's difficult to explain. So that's the reason I took Netflix. You might think, why don't you take the Amazon? It's not in the one business. It's in the lot of business. Even if you look into the one business, it have a lot of things. Okay. Okay. You understand now which asset I need to purchase? Okay, let me clear it once again. I wrote a lot of things. Once again, I will use the eraser. Okay, now which asset you have to purchase and a total asset, investment amount, and working capital, and what kind of sources you need. Simple. How to procure the fund, how to utilize the fund. Procurement of fund. You have to procure the fund and you have to utilize it to purchase. Simple. Once again. One, procurement. Next, utilization. How to procure funds. Simple. Equity, debentures, bank, loans, bonds, preference shares, angel investors are there, joint ventures are there, lot of options are there. Next, how to utilize it, property, plant and equipment, and working capital. Simple. This is the two things which they will do. And what are the main objective of financial management is to increase the wealth of the shareholders. Profit. A great profit. What's profit? Simple. Okay. Yeah, I think I will go in the flow. I don't want to make it in separate way. Okay. Okay, I explained which asset we are going to purchase and total assets and the cash and what kind of source we are procuring. Own fund, how much you are borrowing and everything. And one of the thing, when you are borrowing, the cost of the borrowing, the cost of the capital in financial terms, you will say capital. Yeah, if you look into the equity share, capital. Yeah. So one of the efficient acquisition and allocation of the money. One, finance. Efficient acquisition of money, which is known as financial options. We financed from whom? From equity or preference, debt, bonds, and a bank. How utilized? By making into the investment in the asset. What kind of assets? Property, plant, and equipment. Simply, we can call it as fixed asset. Oh yeah, building is there, land is there. Anyway, for our understanding, I took property, plant, and equipment. So everything is there. Next, working capital. So what is that? Simple. Current asset and current liabilities. Raw material is there, inventory is there, and cash you need to maintain. Why? Sometimes some emergency may come. So you need to have some cash in your hand. Some money you have to keep it in your bank. Some money you have to keep it in your hand. Suddenly you need 10,000 rupees. Suddenly, like for example, there is a small issue with the transport vehicle. So right now, what's happened? The mechanic is say, if you take cash, I will repair. I will send it into the through the bank. Suddenly, the bank scheduled and 3 hours maintenance time. You can't send the money. What will you do? You have to wait for 3 hours. So to avoid such a risk, yeah, technically, if you look into the banks which you are having, sometimes they will schedule a maintenance. At the time, you can't share them, send the money. Like technically, if you are sharing small amount, okay. But if it's something, if it's bigger, then you can't do it. Okay. One of the thing, how you acquire the money. Simple, efficient. Equity or preference or debentures or debt, bonds, bank, angel investor, JV, everything is there. How you procure that and how you utilize it, how you allocate investment, which kind of investment. Are you purchasing any property, plant and equipment? Or are you purchasing any other fixed assets like land or building or maybe like what are the things? Other things, like other fixed assets. Why I need to put a lot of efforts in. So like, every line items in the balance sheet. If you look and understand the financial management, everything revolves around the balance sheet line items. I will show you and explain you using the balance sheet also. Okay. Next. Okay, now what is financial management? It's make decisions, ma. For whom? For owners. For what? To make profit. So that's the reason the objective of financial management is to make profit for the owners, not for anyone, for the owners. So what are the three decisions they make? Fixed deposit, sorry, financial decisions, investment decisions, and the dividend decisions. Sorry, I hadn't fixed deposit as an example for the thing. So where to get the money first? From where? Till look, 1 second. Where to get the money? Where to get the money? Simple. Equity, preference, debt. You can take bank, from public. Right now you understand now. From bank means what? What from public means what? From bank means you can take a fund based and non-fund based. From public you can get equity, bonds and debentures, preference shares. Okay, you got the money. What to do? Where to invest? Property, plant and equipment, or working capital. You have to decide. And you have to decide short term, long term, medium. Okay. Right now you got everything. You are running the business. You got a profit. Okay, right now one of the great decisions, dividend decisions. How much to distribute among the shareholder to keep them satisfied. Think in this way. You are paying 9 million and you are retaining retained earning 1 million. The shareholders are very happy. Great. But think in this way. Think. There is a small project right now. For that, the company need 9 million. Okay. If they are using equity to listing and everything, it will cost money. So you are borrowing money. Okay. You need to pay 10% interest. You are having some, think in this way, for a list and everything, you are spending around 2 lakhs, hypothetically. And after that, you are getting 9 million. It will take time. It will take 3 months or 4 months. So you can't just like that, you can't do, you can need to have SEBI permissions, legal requirements are there, everything. Anyway, for borrowings, it take anyway 1 month. Anyway, right now you are having 10 million. Okay. Instead of doing this first, you are having your own money. So in AGM, what ma? In AGM, you explained the same first and said, we are having 10 million, no, I will pay 1 million as a dividend. You have to convince. Literally, you have to convey so that they should be convincing. You will retain the 9 million and you will invest in a project. Sorry, I explaining the 9 million project, which will give 5% return. They are thinking, okay, 1 million coming, no, I'm okay. To keep them satisfied. Okay, not 9, instead of 9 million, they are, instead of 10 million, they are getting 1 million. Okay, they are satisfied. Anyway, the company using my money, so they will generate 5%. Okay, thinking this are their 9 million. If they invest in fixed deposit, they are getting 4%. Then they are thinking, I'm taking risk. No, I'm giving 9 million. No, I'm getting 5%. Okay, they will think in this way. If it's 4%, they will say no. They may say yes, they may say no. Okay, it's a dilemma because both are same. Think in this way, the project will give only 2%. What the company, the shareholder will say, no, don't invest in this project, give my money back. So think in this way, if the project gives 10%, what the shareholders will say in the AGM, okay, great, utilize it. You even take this 10 million. Okay, use 10 million and use it for 10% return. Anyway, you rationally think it will happen. So that's the thing. So dividend decision is very important. But you can't make the same dividend decision for one organization. For whom? For not for profit organization. But not for profit organization. Simple, they are not running for profit. No. They are having the same business. What ma? Same business. Cotton to cloth. They are making profit. 10 million. Don't say not for profit. No, I are earning profit. That's not the meaning. They will utilize this profit for their own purpose. Ma. Think in this way, they are utilizing this money for running hockey. They are encouraging this sport. Ma. They are using this money to the players. They are giving the money to the players. Ma. They will prepare. They are conducting some. They have their own like stadium. They are spending their money here. You come and play. We will make international level publicity. We will make this go worldwide, global. We are going to make the hockey as the #1 game in the world. They are promoting the example. You may think, everything sounds familiar to cricket now. Yeah. Okay. Even the BBC also some kind of trust, if I'm not wrong. Anyway, like I don't want to go in there. I'm not into that sports. Okay. So that's the reason I took hockey. Yeah, if you are incorporated trust, you will get some benefits. Yeah, something called 85% or something. You need to utilize it for the purpose for which you are incorporated. Anyway, the financial management makes a decision for what future, not for present. As I said, right now, my friend plan to buy a bike. When today? When he is going to buy? Think in this way, after 3 months, what he done today is planning. I got 25 lakhs in hand. Okay, yeah, 25 lakhs to borrowing. It takes time for, so he's procuring the funds, planning. So planning for what future. So think in this way, purchased, my sales is more than Domino's, Pizza Hut, and McDonald's, everything. Will you invest in my company? Simple. My purchase is 100 million. My sales is on 10 million. So purchase. Okay, now my sales is, okay, there is no any expenses. 90 million is my profit. So I paid for them and purchased everything from them and sold for 100 million. Will you invest? As per book, this is my profit. Simple, as per paper. Great, you may say. I will say, where is cash flow? Simple cash flow. Purchase made, no, it's a negative. Minus. Okay, what about sales we made? No, plus, no, where is that? No, there is no such thing. Why? I gave a credit. What, ma? I gave a credit for how many months? Not for months. Credit for 10 years. Yes, this is my advertisement. Simple. My sale is what? 100 million. When you need to pay after 10 years? Who cares? I will think about it after 10 years. Everybody will purchase from me. I said 100 rupees pizza will be cost 1000 rupees. Anyway, I need to pay after 10 years. No, I will purchase today. What? Think in this way. It's an example. I know, stupid example. But think in this way. It have negative cash flow. Right now, look into the net profit. What is that? 90 million. Did they convert it into cash? No, they can't convert. So that's the reason. The business should be capable of converting the book profit into cash. That's the reason in financial management, we won't look into the book profit. We will look into the cash profit. Even if you are planning to invest in any stock market, if you are planning to acquire any business, even if you look into stock, the Shark Tanks, and everywhere, they will look into the one line item is called positive cash flow, positive cash flow. The financial management is a managerial activity. Simple. You have to manage what, like controlling and planning. Simple as I said, my friend planned. Yeah, stupid plan. He forgot about fuel. Okay. You have to plan accordingly. Plan for what? How to utilize the funds and obtain and control. Think in this way. My friend had 50 lakhs bike. What 50 lakhs? Great. Okay. Think in this way. You spend everything, no? What about next month? No, no. What about next month, next day? What? Why should I take next day? Today, right now, is middle of the road. You don't have a financial control. He spent on the bike. What a stupid bike. If you look from the point of view of their family members, you will think, "Are it's idiot, na?" So that's it. When you are planning something, you have to look into all the possibilities, whether it's profitable or not. Simple. As I said earlier, if I can't convert the book profit to cash, then it's not advisable to run a business. Why? Why should I care? So that's it. Then there is three decisions, mark. One, finance decision, investment decision, dividend decisions. As I said, the monies which you need to get and where to invest, working capital, and how much to distribute. Okay, dividend 1 million. As a return earning, I will take 90 million. Okay, sorry. I took 100. Okay, no issues. Whatever. So overall goal of the any business is to make profit. But if you look from the financial management profit point of view, you have to make a cash flow. It is very important. Making profit is great, but what about this positive cash flow? I hope you understand the pizza example. Sold for a credit period of 10 years now. Anyone will come and purchase. Even if he is not eating, he will purchase and he will go and sell somewhere. But no. Okay. Next. Okay, there is a definition, financial management definition. What it will do, it will forecast. Simple. As I said, right now I'm planning to buy something. Means you are forecasting how much value of the bike. My friend said, no, 50 lakhs. Yeah, forgot about the petrol, the fuel cost. Okay, you have to make sure everything. Planning. Okay, simple. How the fund will be raised. Financing activity, financing decision is there. No, equity, debentures, and everything. For example, It's great. Anyway, debt is low, no issues. If even something happen, I can use this money. Think in this way. Equity, great. Debt. What will you do, ma? Will you invest in this company? You have to meet the fixed financial obligation to pay, make it. So you have to minimum target will be 10%. So that's it. So that's one of the thing. Financing, organizing. Anyway, you have to funding. No, you have to organize everything. Which combination is there, and you have to guide the employees what to do, what not to do, and coordinate. Okay, whether everything is going or well. Controlling. You have to monitor everything. How is it performing? You purchased a non-current asset. Okay, what's the revenue? At least you will expect something. 10% I need minimum. 20% I need something in the return. No, it's there is nothing going on. What happened? Okay, simple. Everything is right. There is no raw material. You forgot to purchase. You forgot to restock it. One of the greatest dangerous thing which you can expect from anywhere is like the stock out. What no? Stock out. Okay, stock out. So you have to consider about all those things. Think in this way, you have to coordinate with the procurement department, the purchase who make the purchase of the product, purchase department, production department. You have to organize everything. You have to look into consider everything. You have to come up with rewarding systems. Reward. Yeah, you have to coordinate, no direct. Okay, purchase department go and purchase. Okay, then say, oh, what to purchase? A raw material. What is the raw material? Cotton. Okay, what's the how much kilo? They are saying hypothetically take. This much is required for 1 month. Okay, 10,000. Okay, who will say? The production department also. Okay, what about the price? They will do the purchase price thing. The quantity will be decided by the production. The price will be decided by the purchase department. Think in this way. On an average, 200 kg will be there. One thing if you take one to let's say 10,000. Okay, rupees. Okay, rupees. You have to negotiate. Think in this way, it's good quality and everything is fine. Means okay, you can pay for this. They are saying 200 kgs, pay 5,000. Are they great? No cheap. No. What about the quality? Very low. It's not even worth it. So the purchase department not only need to negotiate about the price, but also quality of the product. If they purchase lower quality, then the production department need to pay the price. Especially the company need to pay the price, but production department need to spend a lot of time to do a lot of process once again. Then, as I said, it's a managerial activity which acquisition and financing the product. What will the financing from the bank? What kind of short term or long term? What kind of bank deposit or overdraft? What about the long term issuing shares, borrowing from bank? Everything will happen for the running the business. And some, as I said, if you look separately, there is one more definition: acquisition, application of financial shows. For what? For financial objective. What is my objective? Making profit. If you go and see any like a project they take, sorry, profit project, any project, they will say they need money. They need damn sure need the return. At least they need the capital break even. At least break even point. They need. They can't run a business for charity. Yeah, you can run the business for charity, but you need to make profit, ma. That's important. Okay, what? FM decides what, ma? It's make a decisions. If you take accounts, it will record everything. What? Record. For journal entries, what will you do? You will look at the bill and you will entry. So accounts, practice speaking, it will record everything. Yeah, it have a lot of things there, but they won't make any decisions. They are relating to the accounts, which they make decisions. But financial management manager or financial management or subject will guide you what to do, what not to do. There are a lot of names for the subject also, but for us, the topic is financial management. So you have to decide which asset you should buy, which specification asset you needed to buy, and what combination of asset you need to, and what's the expected outflow and inflow of the funds, and how much money you need to spend, and what about the size, what about the growth, how large the business should become. Right now, I'm making 10 million as a turnover. So you are planning to expand after 10 years. Within 10 years, I need to make it 10, okay, take it as 1,000 millions. You are planning to expand. So what's the growth? My expected growth is 1,000 million. What to do? You have to do the forecasting. The right now, if you look the right now, what to do? You need the turnover 1,000. Okay, right now forecast. I need a property, plant and equipment. How many? 100 property equipment 300. Planning how to raise this fund. You are saying equity. No, it's highly risk. Okay, we will use your return earning. Okay, we will use debentures. We will call the bank. We will take preference shares. We will issue bonds. Your bonds is not in present, but as per top business book, I am explaining it as the bonds. So planning, organizing. You take care of this ma, you take care of that ma, you take care of that. Directing. Okay, okay, we got us this. We have to do that. Coordinating. Okay, what happened? Controlling, monitoring. Okay, I said this no, he done. Okay, what happened? It's simple. Purchase department said for 10 rupees I will purchase 1 kg. Okay, great. How much for I purchased for 1 kg? Purchased for 20. Array, what's happening here? Sir, it's high quality, sir. They're saying, okay. Think in this way. 1 kg they are purchased for 2,000. Array, why there is a huge difference? They will question. That's the reason about monitoring. You will do all those things. But anyway, when you are entering into any business or anything, you will may assign to one single division. You may not be in the position to understand everything. The financial management is something related to procurement of fund and the effective utilization of funds forward to achieve the business objectives. What is that? Making profit and maximizing the shareholders' wealth. Okay, right now we are going to look into the topic called procurement of funds now. Anyway, I hope I explained the basics. I used the same example multiple times. Anyway, the definition is same. How you procure the fund, how you utilize the fund. After making profit, what to do? How to distribute. We are having each and everything in a separate topic. We will be discussing the basics, not the in-depth, but in real life, it may not be similar, but it have its essence, its presence. Okay, procurement of funds. Nowadays, we are, as I said, right now, we are having a lot of things. Different sources are there for what? For procurement. So that's the reason we have a lot of complex problems. Think in this way. Do you need pizza or burger? Simple. Great. You will choose one. There are right now. If you take pizza, hypothetically pizza, there are 100 varieties are there. Which one to select? Lot of problem. Literally, once upon a time, if you look into any hotels, they you can see hardly 5 menus item will be there. Take dosa, one or two varieties. Nowadays, if you look into dosa, they are having hundreds and hundreds varieties. With onion, without onion, with ghee, without ghee, as the same. When we are looking at the fund, they are having a lot of options like bonds, debentures, angel financing is there, owners funds, venture capital. And if we go for the bank, they are giving short term, medium term, long term, fund based is there, non fund based is there. What kind you need? You need to understand everything. You need to make a lot of research on each and every topics. Even you can go for global. Yeah, domestic market is not enough. We are going global. Invest in my company. Literally, it's happening around us. If you are into stock market, if you look into the like the investor things, there will be something like a public promoters, and there will be FII. Sometimes you might have seen LIC. Yeah, there will be holding some money in this company. For few of them, it's indication. If they are investing in India, just like they won't invest. Okay, first thing. They will make lot of analysis and invest in India. So if a company stock with FII, quite lot of person without thinking anything, they will invest. It's one of the key thing for them to invest in an organization. They will look into the PE ratios. It's all in our syllabus. PE ratio is there in our syllabus. It's one of the criteria. Even Warren Buffett, I think you know Warren Buffett. If not, Google him. He also gives some criteria. If it's more than 20, I will invest. If it's less than 20, I won't invest. Okay, anyway, right now we are having a lot of resources available and has to take care of a lot of things, and there are innovative ways to finance the products which we need to make sure meets the investor need. One of the investors, say hypothetical example, invested in my company, he say I need tour. What? You need a tour plan. I don't need dividend anything. You need to take me to some location. Hypothetical example. There are few companies which have a weird objectives. You may not know, but if you are into the financing department or into the investor, if you are investor, there is a person who invests in each and every company. He holds one stock mark. I mean, one share. Okay, he almost have 10 years experience something. Problem is he has lot of questions. What? Lot of questions in the AGM. The questions are very large. Oh, 10 years of experience. He attended every AGMs. He listening to everything. He learned a lot of things. They're asking why there is no cash flow. Simple, they have said a book profit, as I said, no, 100 million. Everyone will invest, no. But he's asking, cash flow is less, no, why, what happened? He's asking a lot of questions. So there are a lot of persons who learn through experience, but we are not like him. We will learn through understanding, systematic way, scientific way of managing money. The one of the role of the financial management. So that's it. So we constantly look into the new creative funds. As I said, there is something called carbon credit. They are using a source of funding. You give, I will give that. There is some licensing. For example, every company they will some limit. This company utilized its 100 limit. I think it is 100 credit. There's one more company. It used only 50 credit. They are asking sell the 50. I purchased 50. Like that, they are also doing something. The carbon credit. Okay, funds are arrived from different sources and they are having different characteristics. One, risk is there, cost is there, and control is there. If you are taking equity, think in this, I'm owning 51%. If I increase the issue, what will happen? Think in this, right now 100 lakhs is there. I'm owning 51 lakhs. So I am the owner of the organization. They issued a 200 lakhs, increased it. Right now I'm owning only 51 lakhs. What about others? So it's diluted. I won't own a 51% dilution. What, 1/4 of the value I'm holding, that's it. Before that, one of 50%, 51. Right now I'm hardly owning 25%. So that's the reason they will have to look into all of the options. Okay, you are saying you will lose the control. What about the cost? You have to look into the cost also. You need to pay interest, no. You have to pay for issue, no. Like that, there is a risk. So that's the reason the company should make a minimum level about two factors: the risk and control. Have the minimum balance, the optimum level whenever they are procuring the money. Okay, next. One of the key consideration of sourcing fund is you have to strike a balance between equity and debt. As I said, control the 51%. Due to increase in issue, what happened? 25%. I don't have any control over my company. But I said, I'll go issue equity. Okay, instead of issuing that money, as I said, you should debt. I'm the owner of the company, but you have to pay. You have to meet the fixed financial obligation. What interest? As I said, creative after 5 years, I will convert the debentures into equity. Creative ways are say redeemable, irredeemable are there. There are a lot of things. I'm not going in there. So you have to understand the risk, controls, and the cost. Okay, right now we are going to discuss about something called equity. The funds raised by issue of equity shares. Best from the risk point of view, don't have any risk because you have to pay at the time of liquidation, not right now. If you take a loan, it'll have 5 years. Time period will be there. But when it comes to equity, it will perpetual, it will exist long lost. So at the time of liquidation, you need to pay. Or else there is no question of repayment. So the risk is low. Cost is high. Why? Issue cost is there, no? issue. Like legal requirements is there, SEBI is there, the listing process is there. Like that. It's a kind of most expensive source. But there is one more thing. The shareholders experts dividend, as I said, 1 million, 9 million dividend. retained earning. I have to convey everything in the AGM. For next year, you will get 9 million plus 10% return. So damn sure you'll invest. Okay, take it, no issues. But you are saying 1% will be the return. Then said, give back my money, I will invest in the fixed deposit. Okay. Anyway, the fixed deposit giving 4% hypothetically. Don't say, I Googled it. It shows different value. It's not the same. Okay. For understanding, taking some random values, but you have to understand the concept. And normally they require the higher rate of interest rate. And dividend is appropriation of profit. So tax is tax is not allowed as an expense in income tax. That's one of the problem. And when you are issuing shares, what will happen? May dilute your controlling. So control of the shareholders may reduce. So you have to consider everything and you have to come up with the something called optimum level, optimum combination, the balance. Okay, what about debentures? We are discussing about the characteristic feature. We are not discussing which is better and worst. One of the thing is comparatively cheaper than equity. And it has a tax benefit. Interest we are paying on the debentures is free of tax. Simple. If you are 10 million is profit, already I am making 1 million interest means after 9 million, take in this way, you are paying 30%, 3 million. The 6 million after making payment of 3 million tax, the 6 million will go shareholders. But in this scenario, it will go for debentures. So tax, no tax. Practically speaking, tax saving. Think in this way. This is the same, the interest is 0, 10 million, 30%. Anyway, I took the 3. Okay, take it is 2.7. Sorry. Okay, take 3. What's the value? 7. Tax. You are paying extra tax. What? Yeah, we are paying extra tax now. While comparing to like that. When you are taking the debt, it will also save the tax. So that's one of the things. But when you're taking dividends, 6 million, it will go for shareholders. That's kind of you won't get any tax benefit because income tax doesn't allow dividend as an expense. But interest making a payment is considered as an expense, as a deduction as per income tax. That's the reason we need a combination of all knowledge. And anyway, it have risk, you have to pay, and it have an agreement. So after some point of time, you need to repay. But when you come into the equity, no need to repay unless it is liquidating. But in this scenario, you have to repay after the term, or you have to face the consequences. Irrespective of profit or not, you need to make the payment. But when it comes to the equity, if you are making profit, you have to pay dividend. Damn sure they will expect. So that's the thing. Next, commercial banks. They play important role for funding. Anyway, not only supporting business for deposits and payment, they will help you for meeting long-term and short-term needs. They will give the loans. Simple, you are making sales, goes to the bank. You are making purchase, making to the suppliers. Customer pays to you, it goes to the bank. Supplier making a purchase, I mean, you are making a purchase from the supplier. So you will make the payment to them. Not only that, but also it helps you to get the money from the bank. What kind of money? Simple. Lending services. What? One fund based and a non-fund based. One is guarantee and a letter of credit. Simple. Think in this way. A company is German in India. He purchased some raw material. Something, take it as a fixed asset, something. He's saying 30 days credit I need it. I can't give it. Why? I don't know who you are. Why I should give you 30 days credit? That's what they're saying. Then middleman came, bank. Bank help me. The bank said, no issues. You give 30 days credit. If he didn't pay, I will pay the money. So what he giving? Is giving the guarantee. Letter of credit also same. And a fund-based overdraft, there will be limit for you to withdraw. And the term loans, working capital loans, cash credits, bills, it's not much in existence, but these things involves cash. One is fund-based, non-fund-based. Fund-based and non-fund-based, the name itself says they're both the meaning. Fund means you will get the money. Non-fund means you won't get any money. There is something called international market. One second. Okay, in this scenario, like international fundings, we are going not limited to domestic but also global. Like what? Simple foreign investors, GDR is there, ADR is there, FDI is FII. As I said, FII. If you look into the stock market, you can find it. If possible, I will try to show, but I don't think so it's possible. Due to liberalization and globalization, the option to raise capital from the international market is right now available for us. So anyway, the mechanism of procurement has been modified little bit. Time to time, it will change because of the treaties and agreements, how we are interacting with them, like things. Think in this, there is a issue, there is a war, you can't do anything. You can't do anything. So anyway, the requirements is a little bit different. Think in this, if you are going to bank, they will ask for collateral, like land, tech, jewels will be the better understanding. Jewels, the only thing. But if you are going to foreign market, the foreign investor, the process will be a little bit different. Okay, there is one more person, the angel. Yeah, the person with the angel, the wings, the angel investor. Okay, the angel investor. The angel financing. They usually form of an equity finance, not like a debentures or something. Equity. Who provides? The one with wealthy money, for whom? For startups. I have an idle cash. I am a very rich guy. I have a lot of money, so I will give it for them. For what? For expansion or for the ownership. I will get something from them. For what? In higher rate of return. How much they will invest, 25 to 60% they will invest, to get start up. As I said, for starting that business, they will help, when they are used. Last option for the startups, which doesn't qualify the bank funding or too small for venture financing. I need 100,000 rupees. For what? My product. Simple. Nowadays, 10-year kid also ready to make a business. Okay, there is a kid in my neighbor who asked me, bro, you are having money, no? Give me 100,000. I will pay you back after 2 years. For month on month, I will pay you some money. Think in this way, I will pay 1,000. Hypothetically, take 1,000 rupees per month. After 2 years, I will pay back the 1 lakh. Plus you, and I will hire you as an accountant. Okay, what's this business? Simple. Selling fish. Not the fish which we eat, the fish in the decoration. Okay, fish, the fish tank we have, no, for that. Say, "Arey, why you need this much money?" No? I asked. So he said, yeah, there is a lot of variety of fish. Okay, they're suddenly arrived today, na. So it's kind of rare piece. I need to purchase. Usually he will purchase out of 1,000 rupees pocket money. Right, suddenly this came. The price of the one fish is 1,000. So I'm planning to purchase 100 fish. So what about the fish tank, Dan? The fish tank will be there. No, what about? I have a bigger one in my home. No, by my home, no, there is a big fish tank is there. So give the attending. I will sell it for think it is 1,000 rupees. If just so you are saying, I will sell it for 2,000 now. So after selling everything, damn sure I will get your money, and I will double the money. What is saying? 2 lakhs will be doubled. 1 lakh will be converted into 2 lakhs. So after minusing, he will get 1 lakh, and he said I will pay like 1,000. So after 24,000, he will get profit, and he's saying, okay, for arranging everything, do help something. I will take 10,000 out of the pocket. So after making everything, thinking so 1 lakh minus 34,000. They're saying balance how much will be here? 66. 10, okay. Yeah, 66 lakhs, 66,000 will be there now. That will be my profit. He's explaining the pitch. So I gave him. So I'm an angel finance. He can't go for bank. No one will come and help him. So like that. Think it this way. It's angel financing. Okay. Just for example, I took some small thing and explained it. So simple thinking is I invest the same thing for 2 years in fixed deposit for 4%. How much I will get? Hardly 20,000. I don't think so. For 20,000 will come. Okay, hardly will get 10,000 more. 8,000, 8,000, take it 16,000 anyway. Just for understanding, I'm taking 10,000. 8,000, 8,000, and 4,000 in the first month, and next month 4,000. Take it as a 8,000. So right now, if I gave it to him, he is saying 24,000 now. So he is negotiating with me. So I will invest. He know how to sell simply. We are in apartment. So you know which home has the fish tank and who are the fish lovers. And there are a lot of persons who are not in a position to go to the fish market. I mean, not the fish market, the aquarium or something, what I don't know, to get the fish. But he's saying, I will go and get it. So I will give it to them now. For transportation, they themselves will come and give now, no issues. We are very friends. So I am became an angel investor in this scenario. So that's how the angel scenario. So as I said, it doesn't fit for sometimes for the bank investment. Think in this way, oh, if I are going to bank, he's going to the bank, banker. Okay, bank manager, this is the idea, okay, lend me money. Okay, give me some collateral. The problem is he need the money within 2 to 3 days. If he go for the bank, it will take a lot of time. Then they won't grant the money. That's it. So take anything into your like put it in your mind. Come up with something. You will understand how the subject works. Okay, next effective utilization of fund. Right now you got the money. What? You got the money. How will you utilize it? Simple. The financial manager points out very important things. He is responsible for funds kept idle. Array, we bargained, we negotiated, we got 100 million. It's sitting idle. What about the purchase team? What happened to him? They are sleeping, sir. What happened? The 100 million came. They should go and purchase the property, plant, and equipment. They are not taking any action. So you have to look into everything, monitoring everything. Okay, you are coordinating. Array, we have got the money. Don't forget, we got earlier. We said 30 days. Within 15 days, I got the money. So come and take the money. Or sometimes we are having current asset in that cash is there, working capital loan. It's idle. What to do? He will come up with some ideas. Array, there is a raw material which is in lower price now. Right now, prices usually it's 10 rupees per unit. Right now, 8 per unit. Let's purchase for a few quantity. We utilize it. Instead of keeping this money, put to use. He will come up with some ideas. And whether proper use of fund is there or not, he will look. Where proper use of fund is not being made, what will he do? He will take the responsibility. As I said, there is some money. They are spending lavishly. Think in this way, he booking flight for what? For Coimbatore to Chennai. Okay, what's the he's booking in some economical. How much it costs? 20,000. For up and down, 40,000. Array idiot, we have car, office car. Even if you put petrol, it may not cost more than 10,000. Even if you stay there, hardly if you spend 2 to 3,000, 3 to 4 days, it may not cost much. So you have to monitor whether the fund is used properly or not. And anyway, we are procuring the funds at the certain cost. Damn sure. As I said right now, I need to pay 10% loan, the interest. Plus, there is a risk. Think this I borrowed money from bank. Suddenly, the bank is asking, give the money. Why? The bank is liquidating. Yeah, suddenly you borrowed money from them. After a week, they are saying, we are liquidating the bank. What happened, ma? This branch is not making money. The entire branches they are planning to close. What will you do? So hypothetically, there are certain risks are there. So you have to consider. If that's not utilized and the company is not make profit, then don't run the business. Yeah. Think this way, you're taking a lot of risk, you are putting a lot of time and effort, and you are not in the position to make a profit. As I said, 4% fixed deposit interest is there. Go and invest. You are borrowing for 10%, 10% loan amount. Rate of return is 1%. Don't invest. Simple. No point of running the business. Yeah, you have to make sure properly utilized and profitable or not. You can't choose silly projects. Then you have to look in the project which gives more than 10%. So it has to be higher than the cost which you procured. Simple. Rate of return. Think in this at 20%. It should be in this basis. At least if it's both, okay, no issues. If it's less, leave it. If it's possible for you to manage 1%, okay, sir, it's a government project. If you do this well, we will get 10 to 20 project. Okay, we can make one or two project as exceptional, but not everything. So when you are utilizing the fund, you have to make sure whether the fund is kept idle or not, whether the fund is properly utilized or not. Where proper use of fund is not being made, who is responsible? The financial management. So what to do? You have to make sure the fund is utilized properly or not. Anyway, certain cost is incurred. So we are also having a risk. What we are having, cost and risk right now. We have to balance it. Simple. The cost is 10%. You have to make at least revenue of 20%. Great. You have to meet labor, no? You are paying 10%, okay, 10%, 10%, okay. What about labor? What about raw material? For that until you need money, no? So the expectation of the shareholders is there, expectation of the laborers are there. Everything you have to meet. Not only the money, yeah, procured money, everything great. There is a bank which became insolvent, I think. So they kind of a bankruptcy. The bank itself it. But that Silicon Bank, if I'm not wrong, they had a fixed deposit or something, anything, I don't know. Like it's kind of fixed interest. At any point, any given point of time, they will pay certain amount more. Usually the banks won't pay that in such a way. Simple think in this way, 5% irrespective of anything. Other banks are saying we will pay 4%. At the time, everyone invest here. Suddenly, next year, we are paying 6%. They withdraw the money here, invest here. They are losing customer at the time. Suddenly, we only pay 1%. They will come here. Okay, the market is having a fluctuation, though banks are making adjustment. This bank made a silly mistake fixing like this. Yeah, generally that's what they said, but there are a lot of things happened in the bank. The managers are not well equipped. That's what I can say. Okay, aspect of funds utilizations. Two aspects. One, two, or fixed assets and working capital. The fixed assets, funds to be invested. So company can produce optimum level. But it's a revenue generating asset. It's not a non-current asset, it's a revenue generating asset. Because if I put raw material, what I get? A fixed goods. If it's a 10 rupees worth of raw material, it became 25. I will add my margin, I will sell it at 35. So there is an increase in the value, no, the cost and my profit. So for at least we need to make it optimum level. So what we need to do? We have to make sure we are financially solvent. Plus, the person who is making should have a knowledge, something called capital budgeting or investment appraisal. What he will do, he will plan the processing and determine whether my long-term assets would provide a desired rate of profit. I'm expecting 10% profit. Thinking this is 25, I'm selling for 20. So thinking this, I'm expected profit is 5 rupees, but I'm selling for 10. Okay, great. I'm getting no fine. Net profit, take it as hypothetically, take it like as take. I don't know, I won't come that. Take 3. Okay. I already take that if it's 3, 10 something, they are having. Anyway, my expected profit is 5 and 3 more. But what I got means, I got gross profit is still 10 rupees. Rupees. Okay. Anyway, net profit itself take 5 rupees. Great, the company is performing very well. So what are the long-term investments? New machineries, replacement machineries, simple. Right now I'm using a manual-based machineries. Right now I'm planning to semi-automated. So you have to compare both and both. Okay, what will happen if I replace? I have to kick 10 to 20 members. I have to hire 1 or 2 persons. Yeah, simple. Yeah, if you are having new machinery, you need a new person who knows how to use it, or you need to train your existing persons. Sometimes you are purchasing some machinery from out of country. There is a possibility that machinery may not have the manual in your language. You need a translator. You need an engineer who understand that thing. So you have to or when you are purchasing from some other country, negotiate with them. Send 5 to 10 members for next 10 to 12 months. We will provide the food and everything. They need to teach us how to use the machineries. Next, new plants, new products, R&D, very, very important. If you are not having R&D and you are planning to grow, that's it. Think in this way, Apple, they invented something called face unlock. Yeah, simple. If you look at the screen, the phone will unlock. How they made R&D, R&D, and what is it? Airbag. How they made inventions? They made the R&D. Netflix, Netflix, R&D department done DVD business into the online. They are selling DVD. They spend on R&D. They made it online, huh? If there is no R&D, DVD, that's it. We don't even know what is on Netflix right now. That's how it made. So the R&D is very, very important when the company is growing. Even if you are making something else, you have to come up with the ideas, what to do, what not to do. Okay, fixed asset, okay. What about the working capital? It also be optimal. Make sure no stock out. Fine. Very, very important, huh? Very, very important. Stock out. It may lead to loss of customers. What happened? I went to a bakery, ma. Snacks. So what happened? I am asking some 5 items. Yeah, they are saying no, 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 no. Are you having anything in your bakery? They said no. Okay. I thought so. Okay, something happened today. Okay, okay. Second day went same. Third day went same. That's it. I'm not going to that store. What happened? Stock out. So I went to different store. He said yes, everything is there except one item, sir. I'm expecting 5 items. He said, oh, 4 items. Okay, no issues. Yeah. Will you go? Thinking this, you are going a petrol pump. Whenever you get there is got no petrol. Will you go there? Anyway, stock out. You may lose the customer. Once the product is not there, anyway, for example, I said 2 to 3 times. Anyway, well, I will go for 2 times. That's the third time I won't give the chance for them. Then why are you having the bakery itself? Shut down. Okay, the financial management keep their eyes open. So the working capital should be kept in the optimal point. Like what? They do not keep much funds blocked where inventories, book dates, and cash. As I said, I am having account receivable, credit period. My example, what 10 years. Great. You blocked the entire sale of 100 million for what 10 years. Acha, 10 years afterwards, you will pay. Yeah. Think this 80-year-old person came. After 10 years, he will pay the, he will remember everything. So you have to negotiate about the credit periods. Take any companies, there is, I think there's a 30 days. Okay, generally the 30 days is okay. Anyway, if it's new, that's a different story. They are giving like 90 days more. Or taking is at 120 days. It's too much. For small business, it's too much. You have to negotiate. You are blocking the money. Book dates, inventory are the same. You are purchasing too much raw material. It will take time to produce. Think of this like a daily basis. If you are converting the cotton into cloth, warehouse is full. Where you are keeping outside, when it rain comes, what will happen? Damaged. There is no precaution. There is no fire extinguisher. What will happen? That's it. So you have to procure the optimal, the economic ordering quantity, if you remember. There is a fun scenario when you can maintain a zero stock, when you don't need a warehouse. When you know it, put it in the comment. Manufacturing units there. My supplier units there. But next door. Okay. Think it is a manufacturing car. Tire is there. I needed to have separate warehouse. I need tires. He will send it. Yeah. Next door. My supplier is next door. So just the just in time. It's not just in time, just in seconds. Okay. So I have to make sure the funds are not at locked in the inventories or book dates or cash. As I said, cash. 100 million keeping idle. What to do? Invest in 3 months bond. Are easily convertible into cash units. Ideally, if you're keeping it's waste. So you have to come up with some ideas. Anyway, as I said, it's over. If you want to like put it pause, that's it. Anyway, as I said, something I need to show. Yeah, the FII. Once again, I'm kind of looking into it. Yeah, it won't be available in your thing. Once again. Infosys, I think so. Let me take once again. I'm kind of looking into the Chrome. Anyway, it may not available. I mean, it may not be in your screen. Okay, I think it's available right now for me. One second. I will share you the tab. Okay, it's not form part of the subject. I mean, form part of it, it's not form part of the syllabus. Okay, it's an Infosys. I need to log in to get into a lot of infos. But if you look into this, you can see a lot of things. The Infosys, it's as on 17th July, the closing price. So, yeah, I'm not into all of this. Uh, this is what I want to explain you. Okay, look into the shareholding pattern now. Promoters are there, FII is there, DIIS is there, government is there, public is there, others is there. Look into the value. Promoters 14%, 14%, almost right now 13% as on June 2026, March 2026. You have to understand the timing also. And FII 33, 33, 32, almost they are maintaining 30%. But recent 2 years, 28, 27. As the same, if you look into the public, how much the public is holding? Around 15%. Yeah, 13% or so. And there are others. And government also investing in this thing, but not much. 0.2. Okay. Okay, let me look into the promoters. Okay, these are the promoters' name. If you want, you can look, but it's a little bit lengthy. If I look into FII, who are the persons investing in this company? Yeah, speaking about the FII, government of Singapore. I don't have any idea who are the sir. I mean, there are international stocks funds only, but I don't know the name of the companies. Government funds, pension funds global, Vanguard emerging market stock index fund. Simply they are stock. I mean, like some entity. I don't know who are they. If you want, Google it. Even for them also, there are a lot of things are there. I mean, quite a lot of persons are there. Anyway, I haven't done any research on it. So don't ask me who are they. If you look into the for this login, you need it. Okay, no issues. And if you look here, they are holding around 2 to 1%, but they stopped the kind of withdrawn. I think so. And the same for this also. They stopped for a while. They have their own reasons. So this is an analysis. Anyway, if you need not to do everything, this is available in this website. You look also the shareholders, the promoters. There's a trust which is holding some. I don't think so. Yeah, holding. I don't know, but these are the persons who are in. Yeah, I think it's a domestic investors. As I said, LIC, SBI, ICI, NPS, HDFC, UTI, Nippon, SBI, Kotak, ICI, Aditya Birla. I don't know the name, mutual funds. So these are the persons who are investing. If you look, they are also not invested for a while. Even the LIC also stopped here. Maybe they changed something, I think so. That's the reason the shift in this. So think in this way, there is a investing done by the domestic investor, institutional investors. So these are the persons who are invested within India. Those are the above persons are the who are outside India. So one of the indicator, this company is making fine. Why FII is there? To look into some other companies, they may not have something. And these are the debtors days. They are giving on an average 66 to 72 days. Anyway, only if we are making everything into put together and making understanding, we will get an idea what's happening in this organization. And if you look into this, there is a huge value increase. Whereas 50,000, whereas 178. Anyway, it's in crores. At the same time, the sales is increased. And you may ask, operating profit also increased. But you have to look into the percentage. Whether it's a 4% different, rate 10 rate 28%, that means 24%. Yeah, sometimes if you increase the sales, you will have some expenses also. No? So you have to understand. Anyway, it's not within the syllabus, but once we complete everything, you can understand. Once we complete ratio analysis, you will understand what is compounded sales. This one. CAGR means what? Rate of returns means what? Yeah, CAGR very important. Compounded profit growth, compounded sales growth, everything. And we are having something called, this is the one which I explained about the dividend decisions. The dividend payout, out of this much they paid. What is the balancing figure? That is retained earning. And they paid 55%. So what? 45% they retained. In this thing, they paid 66%. How much they retained? 44% is they retained. I'm also getting some dividend, but I haven't done the analysis for a while. So that's the reason. So interest, profit before tax. It's a saving, tax saving. No. Anyway, in the middle, they didn't have any loan or all. So constantly they're making, for a couple of years, they're making 416. I'm not explaining anything. So don't think he didn't explain anything. I can't explain anything because unless otherwise you have any idea about it, I can't explain you anything. You won't even understand. Look into this. If you want to understand a company, you have to look into this thing. Especially if you look into this. Simple. They are spent here, here, here. Lot of money. Simple. They repaid or they have sold, something will might have happened. They're expanding or no, you will understand. At the same time, look into this. They procured money, or they may borrowed money, or they may repaid the money, like that. And from operation, this is very important. How much they made during the year and how much they converted into cash. It's very important to make the cash from the operation. 3398. Simple. If you compare it with, don't say, Array, this may have something else. No. Simple. Right now, once again, right? What is the value? March 2026, 33,986. No. Okay, let us go to the P&L. Okay, what's the profit? Net profit. They made 29,474 from operations. This much. There is a difference. Yeah, there is a tax. No. Depreciation is there now, tax is there now. You have to consider. That's the reason you need to know about the cash flow statements, how to prepare the cash flow statements, or else, how it's possible? Yeah, you may ask, I know about it, but it's not form part of the syllabus right now because I haven't covered anything. You have to have gained some knowledges. There are other incomes which you have to understand. Everything, depreciation, so non-cash expenses. Think in this way. 4 no, 29 no, add it 29 plus 4. On an average, you will get same. Okay. Yeah, I hope it matched. But it is little bit step 1, step 2, step 3 like that. We are having like direct and indirect method. Almost they are converting the profit into cash flow. That's important. Okay, some companies, if you look into it, which company, there is a stupid companies there. Quite a lot of them. I don't remember anything. Anyway, I can't show any company right now. I don't know if it's visible or not. Like, yeah, Eternal. They changed the name. I don't know. It's having okay, look into it, but it's not much at the time. It made a negative. If look into this for a while, they made it a negative. Anyway, they are having some other income, so that's the reason it made profit in this sense. But if you look in this way, where is 2000 is there? 17. When? One second, 1 second. March 2023. Right now, March 2026. Within 3 years, what's the value? How much? Within 3 years. 2023 to 2026. Increase in the sale from where 2000 to 17,000. Almost increasing 15,000 more. They increase the operation just like that. They can't increase. They're expanding their own business line. They're spending. Okay, if you look into the cash flow, look, they are borrowing, they are repaying, they are using the money, everything. Look, minus, 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 minus. Yeah, before that, they haven't listed it if I'm not wrong. They, at the time of listing, they kind of done something. So it happened. Okay, you have to understand these things happens like that. How the things happen. This is the website like screener. Okay, the website is screener. If you want, you can look and you can type any company name. It will show you everything. I think this is how the page will look like. If you log in, you will get a lot of things, but any company you can look into it. I don't know what's the company also. So randomly I'm opened it. So this is one of the important thing. Anyway, okay, look into it. It's like making the video becoming more like a stock market analysis. What kind of industry and what are the peers? Okay, the company is related to these are the peers. You can call it as rivals. Let's take Eternal. Look for the peers. Yeah, if you look, we know the well-known person. Sugi is there. Misho is there. Eternal is there. This is the company, but it's in the first place, if I'm not wrong. So there are other persons out there, but I don't have any idea who are they. They are also in the same kind of business. What? Retail, e-commerce. Okay, Miso. If you look Miso, Hari, they are not delivering food, no, but they are in the delivery business. So to make few analysis, you can utilize it. Anything, wherever you are, you can utilize it. Anyway, these last 10 to 15 minutes, I don't think so it's form part of syllabus. For your understanding, I'm showing you. Okay. Let's take a final company. Let's take Tata Steel. Okay, Tata Steel is there. We go into the peers, look into there are a lot of steels which we may not know the names and all. Yeah, we know JSW. It's kind of a little bit. Jindal Steel is there. Sale. And there are I don't have any idea. There are also in the steel industries, iron and steel. And yeah, what is the current market, P ratios, and everything will be available now. For comparison, how it's compared, it's kind of peer analysis. In school, we are having 10 to 20 members. No. In a class, we are having around 100 members or 60 members. I don't know how the capacities are there. So take it this way. We will compare with the others, no, like that. The mom will do. Okay. What's your son's mark? Yeah. He got second rank. My son got first rank. He's a second standard. I'm fifth standard. What's the comparison there? Okay, the comparison should be same. Fifth standard means fifth standard. You have to compare it with the same. You can't compare it with someone else. Okay, if you look, Jindal Steel means it will show the Jindal Steel details. Everything will be available. Anyway, if you are a financial student, I recommend you to use these things. Learn what is what, current market price means what, everything. Okay. I hope I explained everything. One of the important thing which I want to explain, let me write it down. First, I see a bookmark. Read it. Next, watch. Next, read I see a book. Anyway, there is still pending topics is there. Planned for 1 hour. It's kind of went a little bit longer due to this website also. Do this. You will understand the theory topics. And after that, read book back questions. Not at the beginning, after reading the book, after watching the video, after reading that, after that, do this. Then what? Go to ICA website. There is something called MCQs are there. Okay, solve it. The website, there is their MCQs there. Plus there is case scenario based also there. Okay, solve it. And there is some case scenario based booklet also is there. Okay, booklet also is there. Download it. MCQ also there. Booklet also there. For MCQs, there is no separate booklet. For case scenarios, there is a booklet. I don't know both are same or not, but I need to open it. Because like a technical issue for me had, so that's the reason I couldn't say anything. Anyway, have a nice day. I hope you'll be preparing for your exam very well. It's a theory topic which I hope many of the faculties haven't done anything on it, so that's the reason I made it the video on it. If I made any weird examples out of my experience, so forgot it. Put the concentration on your concepts. That's it. Guys, it's just an exam. Don't put too much stress on it. Think about your skills, not about the exam. Everyone's exam is like that great. Okay. No one say, Are you are capable of doing this. Like the bird, the bird. I mean, if you think in this way, that tree is there, the bird will come and sat here. Okay. Suddenly the tree fell down. What will the bird will do? It will fly away. It sat on the tree, not on the trust on the tree, but trust on the skill. What must skill? So as the same. Did you put everything in your exam? No, didn't do it. I want you to do something very important, simple. If you've done a 50% of some, what will you? How much mark will you get, mark? The 5 mark question. You solved off. Think it as you didn't solve off. You solved off. How much mark will you get? 0. As the same goes for theory also. 5 mark question. There is a 10 point. You said 5 point I wrote no, 2.5 give no 0. 100% answering is very important. Small mistakes okay ma, but ignoring everything 50% I ignored, don't take. Are 90% right now, 9 points right now. They may think they will give. If it's the 1 point which deserve 2 mark means they won't give mark much. They may give 3 mark or 2 mark. So sometimes which point will allocated 1 or 2, we don't know. So that's the reason, make sure you write everything. Okay, I will come with the next video. Bye. All the best. Relax. Be calm.